So everybody wants to know, is this time different? Is this any different to the other bear markets? What can we expect with the current situation that's going on? The market's been selling off for a couple of weeks now, and Bitcoin is struggling. So Bitcoin is still currently caught below $40,000. Well, let's get into it. Let's have a look at what's going on over here. So first and foremost, I'm going to start off with the traditional market so we can have a look at how that is affecting the Bitcoin market. We had a look first at Dixie. That was the last time that I did this show. And Dixie closed, this is the dollar index, closed with absolute relative strength compared to the other bundle of currencies out there. So you have a monthly close that closed at the highest level that it's closed at in over 22 years, which is something enormous. I'm surprised that not more people are talking about this. And currently we have the weekly close over here. We have the next candle that's busy printing, and it's not showing any signs of stopping, and that's rolling over into the stock market. Of course, we have the fundamentals of the FOMC meeting that's coming up this week, as well as the CPI print, and these are all factors that are affecting the current state of the market. So let's get into it. Let's get into it, and then we will take a further look. All right, so having a look at this over here, we have a tweet from TED Talks, and I love what he said over here. He said what he thinks about this week's FOMC statement and the press conference. Basically, everything is going to come down to Wednesday, so tomorrow with this meeting, and then the talks that they have after that meeting to see whether Jerome Powell is dovish or hawkish. And he says this event, it has the potential to change the course of the risk markets from bear to bull, or cause a capitulation event in risk, depending on the outcome. So let's have a look at exactly what the charts are saying. Is there any indication within the chart? So going into the traditional markets, we have here the S&P 500. And what I've done is I've marked out the worst case scenarios. How bad could this potentially get? Where are the key areas of support? So marking out the key quarterly areas, you can see that this chart has now started to create a series of lower lows and lower highs. And if you've watched any of my shows, you'll know that once that type of a trend establishes, you really don't want to counter trade it. Rather go with the trend until the trend changes back upwards again. And currently we have a series of 1, 2, 3. So a new trend is starting. This could bounce from the 3,992 area and possibly set in the next lower high. And so the trend will continue. So I'll be looking for bounces anywhere along these key quarterly areas. But the real area or liquidity zone will come from the pre-COVID levels. So you can see COVID levels happened over here where we had that V-shaped recovery, and this is your main liquidity zone. Now, what that means is that the price could still technically come down around 21, 22% from here. Again, this is one of my worst case scenarios. I'm not saying that is going to happen, but it's something to consider. And you'll notice when you look at the other different traditional markets, there is confluence with the same sort of areas. So this is looking at the NASDAQ over here. It's right on a key quarterly area. Maybe it will bounce today and then set in its next lower high. But again, you have a liquidity box over here that's in at the 281 zone, and then you go again to the pre-COVID level, so that's 25% drop from here. Looking at the Dow Jones, that's going to be very similar. This one's got 13%, so it's actually looking a little bit better. It's got a key quarterly level coming in at 30,606, and then you got your box over here, which is where I would ultimately expect price to come. I'm not sure how long this is going to take, but with the DXY looking as bullish as it is, you can expect this to probably continue. There will be pullbacks along the way, and that might be those areas where you get the bounces. So when the DXY pulls back, you'll probably find this will be the zones where it bounces. Now, moving on to crypto or Bitcoin, which is what you all come here to see, I've marked out vertical lines on the monthly chart, and I have 3 moving averages that I'm using, which have boded historically well. That's the 7, the 20, and the 50. And what you find is anytime that we lost the 20, which is the yellow, I marked out that area. Every single time, there isn't that much historical data because monthly is a large time frame, but it's happened 3 times previously. And whenever that has happened, price has moved all the way back down to the 50 MA, which is currently coming in at $21,400, and that will be rising. That will still be rising. What you'll notice as well is how it happens. So as Ted mentioned, there could be a capitulation candle, but I would also challenge that and say, well, what if this time really isn't different? I want you to think about the tops of the previous bull cycles. It happened in 2013, in 2017, and each time you can add on 4 years, that will take you to 2021, which means that the next peak of the bull run could theoretically only come in 2025. And what does that mean for us in crypto? Does that mean that we could have a slow bleed? Well, historically, the only time that we have had a capitulation type of candle, when you market with the MACD as well, you'll notice that there were crosses. And when I look at the MACD on the monthly chart and compare, it does look a lot more similar to the 2017 cycle, where we topped and we came down over 2018 and 2019. And that level over here, it took, if you look at the months over here for this zone, once we crossed and we lost that area, it took 1, 2, 3, 4, 5, 6, 7, 8 months before we got back above that zone. So we've already been trending down for quite some time, but we only recently lost that level. And when you're looking to catch a falling knife, there's only a couple of ways you can do it. I like to use moving averages that have historically worked out quite well. And I find it interesting that the majority of the market participants are still bullish. They're optimistically bullish. And I ran a thread over here, or at least a poll. I said, what comes first for Bitcoin? Is it going to be 23,000 or $53,000? The interesting thing that most people didn't notice is that both of these are $15,000 away from the current price action. And you can see that the majority voted for $53,000 first. With us being in a downtrend, I personally would say the most likely outcome would be that we tag 23 first. I'm not saying it is going to go there. We're taking it from level to level, and I'm going to show you the exact levels that I'm watching and why. So let's go into a low time frame chart. When I have a look at the weekly chart over here, I've also got important EMAs and moving averages on, and you can see there's been a straight downtrend. I have shown the chart previously where we put a fib from top to bottom, and that typical 0.382 level is where the bear traps happen. The bull traps happen, where people get uber bullish, and that happened right over here at $47,000, which is why I was selling that level. So now we can move it down level to level. You have your weekly 21 EMA, which is tracking down. Price is stuck below. It's angled downwards. And this was one of the last bullish hopiums, if you ask me, was to maintain this level over here. So to have 1, 2, 3 higher lows. But as you can see, we're already starting to lose that diagonal over there. And how many more times can we draw it? There is one more that comes in at 37K, but whether that will hold, I doubt. I think it's a very weak level, and this is your realistic next zone to be watching. So as I mentioned, take it level to level. You don't have to be targeting $23,000 and waiting for there. Just see how price reacts at each zone. And currently your next liquidity box is coming in over here between 34 and $35,000, and we'll see how price reacts there. But with risk being to the downside, we can ask ourselves, well, where are we wrong? When do these levels change? So the level to clear was this wick high previously. Now we can move that zone down. So we can start adjusting this. I'll put that over there. So once we start getting above $41,000, now we can start talking about a potential bullish scenario. This was our previous macro high area to clear. We didn't even get close. Let's move that one down as well. I'll put it over there. If we start closing weeklies above $47,000, then the whole macro picture begins to change. All right. Moving on to another chart over here. This is with my weekly MACD, and I've marked out the key quarterly areas. Again, it's very similar. We got that 21 EMA, and the range traders will be targeting an area of confluence between this chart. So you got this zone over here with the liquidity box, and the key quarterly range lows coming in at $34,000. This area has been tested many different times. So remember, it's like trading on thin ice. The more times you knock and you knock and you knock, the more likely it is to break through. So if we lose this area, we're going down to $29,000, and that is the macro range lows. Okay, moving on to another chart here with the 4 days. It comes up, matches up again. You got that area around $30,000 as your main zone. This is where I use my 3 moving averages on a 4-day chart. Historically, it's worked out quite well as well to keep you in trends for weeks to months. And here you got the short-term, the mid-term, and the high-term moving average. And currently, price has fallen below those. And you have them all posturing down into a death cross, so targeting lower ranges. Okay, moving on to the 3-day chart. As well, you can see it does look quite ugly since we lost that 200-day moving average on the 3-day chart. You can see that we've now closed 3, 6, 9 days below that, and we're currently working on the last 3-day candle over here. So this is one of the last areas of hopium for the bulls, is this zone over here. You got that diagonal that's catching this zone over here. If price was able to bounce this week and get above these zones that are outlined on the previous one, so around $41,000, and we start closing back above this moving average, then we can see from there. But just to let you know, historically, any time that we started closing below this 200 MA on the 3-day chart, we had a 50% retracement. And that is the same thing that happened over here on the monthly. The monthly was exactly the same. Once you lost this 20 MA, there was also a 50% retracement. Now we need to ask ourselves, where is that 50% retracement? So as soon as we lost that level, if you go down 50%, it comes down to the $20,000 region. So definitely a risk-off environment, in my opinion. The way that I'm trading it is pretty much just sitting on my hands. I'll wait for the FOMC and see what happens from there. If you end up losing a little bit of opportunity, it's not the end of the world. It's better than losing all your money. Once you lose that, to try and a lot of people don't realize that if the market drops by 50%, you don't need 50% more to get all your money back. You now need 100% more. So I'll post that on my Twitter. If you have a look on my Twitter, I'll post the percentage drawdown versus gain that's required to get your money back. All right, having a look at this chart, this was one of the favorites. Again, this is the only bullish case that I can show, but it's essentially the bear moon. We're coming into an area of diagonal support over here. So this zone over here really needs to hold, and you have a falling wedge. If it manages to hold this, volume kicks in and price can push back above this level. Again, it's going to come in that important 41K area. That's one of the areas that I'm really watching carefully. Once we start closing above there, possibly this could reverse and you can start targeting back towards the 47K range high. All right, zooming in now on the 4-hour chart, what I would imagine is going to happen as well, you can see the momentum oscillators are starting to posture back down. And if we make that a little bit bigger, it's been tracking beautifully since 47K. So this is my favorite chart to be looking at to front run any sort of longs. But the highs were lost and lower highs and lower lows throughout. Death cross over here amongst the EMAs. Price stuck below, tried to get back above, still couldn't clear the main diagonal range over there, and went back down. And now what are we creating? I would say that this is most likely, it's not fully confirmed yet. We need to drop a little bit more, but this is probably going to be your next lower high. So price needs to get back above that. And then this area over here is going to be your diagonal trend line, which I showed on this chart over here. So coming in at 37K. Once you lose that, again, you're probably going to go straight down to that green box territory, which is the 34 to 35. So everything is going to come down to this week. I haven't got the funding rates opened up on this particular tab over here, but I can let you know when I was having a look at the funding rates as well, which shows how many people are long versus short. There's actually quite a lot of longs at the moment in the market. So a lot of people saw this as a dip buying opportunity. And I bet you anything they were also watching that diagonal trend line. And this is most likely where they long from. So longs, when longs are building up with open interest in a downtrending market, that's typically not a good thing. You would want to see, for a sign of reversal, the opposite. I would like to see on my Twitter polls, for example, once I have about near 80% of the people voting for much lower prices and funding rates go negative and hold negative for quite some time, that would be an indication that possibly we could be reversing. But until then, the trend is your friend until the end, as I always say. And this is what you'd want to see if you're looking to get bullish. You want to see price get back above these levels over here, test that area of resistance, flip it back as support, get above the next level, and still only once we start clearing those levels will I consider taking any long. So I want to see quite a few series of higher highs and higher lows in this type of environment. What I think is most likely going to happen, and so far, every time I draw these lines, it plays out somewhat similar, but this is what I would say is most likely going to happen. I think that price is most likely going to come down to here, set new lows, small bounce, retest that as resistance, and it's going to go straight back into the $34,000 to $35,000 range. So I think that about does it for today. If you enjoy these videos, please make sure that you hit the like and subscribe button below. I'll keep you all up to date on my Twitter. And then remember to also check out our Crypto Shorts channel. I'll be doing another video over there. And until next time, I'll see you guys later.